Indians love to spend on food, clothes, travel, gadgets, and more. But what if you could turn that everyday spending trend into an investment opportunity? That's exactly what Invesco India Consumption Fund aims to do. But does it fit into your portfolio? Let us break it down through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, this is a thematic equity fund that invests in companies linked to India's growing consumption story. Think FMCG, retail, autos, consumer durables, travel, and more. The idea is simple. As India's middle class grows, so will consumption and so will these companies. So, as an NFO, it opens on 3rd October 2025 and closes on 17th October 2025. And some of the key features of this fund are: this is an open-ended fund type which belongs to the category of equity thematic consumption, and it has Nifty India Consumption TRI as its benchmark index, and there is an exit load of 0.5% for redemption within 3 months, but there is no entry load, and there is a minimum investment amount required for 1000 rupees, and the fund managers for this fund are Mr. Amit Ganatra and Mr. Manish Paddar. And according to the riskometer, the risk involved in this fund is very high. So the investment objective of this fund is that it aims to seek to generate long-term capital appreciation by investing predominantly in equity and equity-related instruments of companies benefiting from the consumption theme. So now, as we have a basic idea about this fund, let us move on to the analysis part of the video, where we are going to take a look into the pros and cons of investing in this fund. So let's start with the pros. Number one, strong long-term theme. Rising income and urbanization in India mean consumption is expected to keep growing. And number two, this fund covers FMCG, autos, discretionary spending, and even e-commerce related businesses. And number three, India's demographic dividend and rising aspirations support this theme for decades. And number four, if consumption continues to boom, the fund could deliver strong returns in the long run. So these are some of the advantages. However, there are some disadvantages, like number one, since it focuses only on the consumption theme, diversification in the fund is limited. And number two, consumer demand can also slow down during economic downturns or inflationary periods. And number three, popular consumer companies often trade at high valuations, which may impact your returns. And number four, this works better as a satellite investment rather than your primary fund. So what is the final takeaway then? In short, Invesco India Consumption Fund lets you ride India's growing consumer story. It can be a good thematic play for investors who believe in this long-term trend. But remember, it comes with concentration risk and should be considered only as a small portion of a well-diversified portfolio. So our personal recommendation is that if you're a first-time investor, or even if you're a conservative investor not willing to take a lot of risk, then you should definitely avoid investing in an NFO like this. If you still want to invest in a theme like this, there are other similar existing thematic funds with a track record for at least 7 to 10 years, where you will be able to analyze how it has performed in the highs and lows and be able to take a calculated risk. But here, without any proper portfolio and research, because it has no track record, since it's a new fund offering, it's still yet to perform, right? So we do not know how it's going to perform, and if you add it to your core portfolio and then it underperforms, it will definitely impact the overall returns in your portfolio. And it's also, if you do not know when to enter and exit from a thematic fund as well, which is even harder for a seasoned investor, it's better to avoid investing in a thematic fund, and especially an NFO like this. And if you're still having doubts about it, you can definitely get professional guidance by consulting with a financial planner who will look into the suitability of this fund's investment objective, risk profile, overlap ratio, and allocation, and compare it with your portfolio and your goals and your risk appetite, and suggest you better funds or even better strategies that align with your values.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, We also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.